Gold itself is a huge bargain. But when you look at the asset classes, this is the absolute biggest bargain. I believe that you should do what the smartest person in the room on any given topic is doing for themselves. So I'm always looking at that kind of thing. So, and it also kind of works like this. But you need a diversified portfolio. No matter what I'm saying here, even within precious metals, it needs to be diversified. But let's say we go to an auction and there are 10 people at this auction and there's 10 coins on the table and everybody wants one. So wherever the bidding opens up, that's what they're going to pay and they'll walk away happy. But you have one coin and everybody wants that. So now he or she who's willing to pay the most for that coin gets it, but you still have 9 other people that wanted it, right? And there ain't no fever like gold fever, let me tell you. So again, and the premiums on these coins they're not as low as I've recently seen them, but they're still substantially below the historic norm. Or gold and silver physical are the biggest bargains, but even more than that, the collectible coins are, and you're not paying very big premium. But it'll depend. I mean, it all depends. So right now you own a couple of properties, but history tells us what happens to properties during the circumstances that we're in right now. And I mean, this rapid run up, I mean, if you've been in property for a long time, you know that that's not normal for the prices to go up like that quickly, right? So, and what goes up like that must come down and vice versa. So when that happens, those that are not prepared to hold on to their holdings, there will be a lot of properties that come on the market. And it does a flip-flop. So right now you got undervalued gold, overvalued real estate, and then that's going to flip-flop. And so then history also shows us that, and I did a whole piece on this, but 25 ounces of gold or the equivalent would buy an entire city block in Berlin, right, during the Weimar Republic. 25 ounces of gold, right? So, again, you go back to your goals. Maybe you just have a couple of rental properties now. Well, look at all the building that's going on. A lot of that is securitized. In other words, turned into securities and sold. Wall Street sells it to the public, right? They don't care if property prices go down. They've got their money out. Right. You're the one that's sitting there holding the bag. If you're 35 and you've got, a solid job that won't go away. I mean, frankly, I kept working all through the pandemic. I mean, it didn't stop us at all from doing what we're doing. So if you're in that kind of position, right, then you don't need, because you need some level of cash as well outside of the system, not in the banks, but outside of the system, you might not need as much. If you're older, right, then you probably need longer. But this is a discussion to where your personal level of comfort is. When they do an overnight reset, like we see in Venezuela, they've done 3, Zimbabwe, there are a whole bunch of countries that have done that. What they do is they revalue the currency against the gold, and then that's when it expresses somewhere near its true fundamental value. So how do you get that number? Well, you know how to do it with real estate, right? Because historically, 10% return on your investment. So if you're only getting 4%, it might be a little overvalued. If you're getting 15%, wow, it's undervalued rock and roll. Right. So everything has that, and that's where a little bit of judgment is. Right. So going back to the physical, to gold and silver, the most important function of gold is to hold your assets even over time. And that's exactly what it's done for 6,000 years. With fiat money, the goal is really to give you an invisible tax that you don't fight because it doesn't have to go through legislation and for corporations to pay you less and less. But the way that money is created is by debt. So Just to put it simply, I'm not going to get you to the penny. I'm not even going to try. I'll just get you close, right?
Yeah.
So you take all the debt that's been created, because that's a proxy for how much money has been created, and you divide it by the finite amount of gold that exists. You can use in-ground gold, above-ground gold, but gold is indestructible. So we can really, to be very accurate with how much gold there is, to 98%, and that's pretty good. So you just divide how much debt there is by how much gold there is, and that gets you somewhere around $13,500. And the more debt they grow, the higher that number goes. How many
Yeah.
mortgage could you pay off? What might take you 10 ounces of gold to pay off now might
Yeah.
take you a quarter of an ounce or a 20th of an ounce when that reset occurs.
happens.
And that's part of the strategy. So there are different risks when you invest in real estate that you need to cover. And frankly, the best way to cover it is gold. Because what gold does, and I've done lots of studies on this, real estate runs some risk. If you have debt on it, right, then you've got to be able to pay that mortgage. And anybody that's in real estate has recently experienced the rent moratoriums, the mortgage moratoriums, and these are the kinds of things that happen when we go into the area like we are definitely entering right now. They will put caps on what you can charge, but there won't be any caps on your property taxes, on your insurance, on your maintenance. No caps on those, but caps on what you can charge. So what gold as a diversifier does, because this is good money, and the dollars in this country anyway, but the government money is based on debt, and debt is at nosebleed levels. We know that. And interest rates are rising. So you need the gold to ensure that you can always pay your property taxes, and also for when we go into these periods like we saw in 2008, that wasn't that long ago, right? And if you got into trouble and you couldn't handle your mortgage, you couldn't continue it for any reason, then they restructured, they reset that mortgage. And if you were part of that, I'm pretty sure you realized that it wasn't really in your best interest. It was in the bank's best interest. So you want to have the ability to, boom, pay that mortgage off in a moment's notice if you need to do so. And that's why it's critically important that you have gold, particularly in your portfolio, to make sure that you are properly diversified. Because if all you hold are dollars, they're destroying the value of the dollar.